Dumb money confidence up over 80%. Smart money confidence up over 40%. The spread between the two, pretty extreme at over 40 points. When you take a look at this kind of situation in the past, oftentimes short-term gains are likely to be erased during the next correction, and intermediate term returns subdued at best. So when you take a look at short-term market timing signals, what kind of opportunities do we have? Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:21 a.m. Central Time, and I'm recording this in preparation for the market day of February the 25th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in, see what happened in the overnight. What are we facing at this point? Well, basically in the broad market indices, those futures are just barely down. Really call this scratch, just marginally down at this point. Crude oil up pretty well overnight, up 0.57% as of the time of this cut. And the other futures markets that we follow, the euro, bonds, and gold, all essentially rotating around scratch. Overseas, also really quite quiet. Hong Kong, Japan, Germany, all really rotating around scratch. The United Kingdom is down about 1/4, and China down about 0.5%. So nothing really to note in either our own futures markets or the overseas markets to speak of. Volume, range, all these kinds of things are all kind of just kind of rotating around, really nothing to report. In terms of activity on the macroeconomic reports today, we do have crude oil inventory, so if you're a crude oil trader, you've got to be watching for that rip. And then, of course, wild card, you have Janet Yellen speaking before the House today. Now, obviously, she spoke before the Senate today. You wouldn't think that there would be any new news, but anytime you have a Fed chairman speaking on a public stage, it is an opportunity for somebody to jerk the market. So a little bit of a danger signal there as well. In terms of our current volatility, obviously we continue to fall in volatility. Short-term VIX down to a 10.94, and you see for the Russell, the NASDAQ, and the Dow also dropping significantly. Implied IV percentiles are getting very low. In fact, they're all in the bottom quarter range at this point. So you might want to start thinking about what that might mean. Indeed, I know I myself put on the start of a VIX volatility play, looking for increase in volatility in the coming weeks and months, as opposed to consistent and significant drops from these ranges. We're starting to get into that area where volatility is really getting pretty low compared to near norms. Also, you look in terms of the standard deviation moves. Look at this on the S&P. We have been 8 trading days since we've moved more than 1 standard deviation. That is well below normal. So again, another sign, reversion of the mean kind of theory, that we should expect some increase in volatility at some point in the future. This doesn't tell you when, but it certainly tells you that it is overdue. In terms of our daily report, obviously futures traders, keep in mind the 30-year futures contract ZB rolls over this week. Probably going to see rollover on Thursday. Volume, let's take a quick look at the volume between the old and the new. Old volume still running about 2-to-1 over the new contract at this point, so probably should still be trading in the old contract, but that will likely change probably in the next 24 hours. No real significant changes in terms of our current opinions about market trend. The intermediate term phase opinion is phase 3, higher highs, higher lows. We are looking for something of a pullback from short term overbought, but we are at this point not looking for anything significant in a pullback. In terms of investor postures, IBD status is confirmed uptrend. GMI index 6 out of 6 remain the same. Active trader market posture very bullish. And then of course from our position sizing opinions, you'd expect those to be lock and loaded at the 100% with those kinds of readings, and they are. Market timing opinion, a little bit of a change here. 1-day outlook slightly bearish, 3-day outlook slightly bearish, but then the longer intermediate term 2 weeks slightly bullish remains intact. Market forecast opinions based on postures, very bullish, and you see we continue to see these readings really pegging across all 4 indices near their ceilings. In terms of our hedge warning status, current risk level is expected to be approximately threshold level 0 or normal, and indeed there's really nothing from a volatility base, from a trend base, to kind of give you any kind of feeling of inordinate risk at this time. Perhaps the first sign of increasing risk is with our intermarket risk aversion indicators, and we now have a reading of 2 to 3 for risk on. The high yield bonds, high quality bonds ratio has looked like it's rolled over. The 5-year Treasury yield, 2-year Treasury yield, also significant moves yesterday. So all 3 of those would basically be calling for risk off. And this is just the beginning of this, just day 1 of what would look to be a risk off kind of situation. Also, you have the relationship between the S&P 500 and the 10-year bond may be rolling over. So kind of the first fly in the ointment in terms of our typical indicators to looking for risk status, kind of showing that increasing risk may be coming into play. Option income strategies, VIX is still inside the acceptable window for initiating new option income strategies. Just be kind of thinking in terms of those strategies that benefit from an increase in volatility. That would probably be the best way to go in the current context of the market. Cover call strategy, slightly bullish, calling for an equal distribution of in the money and out of the money strikes. And then put selling, still also slightly bullish. And certainly if we do get a pullback, it could be a very nice opportunity to reload on selling puts against a core portfolio basket of stocks that you are willing to own. And let's see. Other changes for today are sector market postures. Notice telecom has been taking something of a hit in recent days. Energy has been improving. Utilities are perhaps improving from their rebound. You have potentially utilities coming into an area of support zone. So we may start to see utilities start to strengthen up. So we'll need to watch that sector. It's had a pretty significant pullback, especially after being the hero class of 2014. In terms of percent change, you see telecommunications up 0.61, utilities up 0.61. So improvement in both of those in the most recent activity, and an interesting mix of low beta and high beta sectors as your top performers yesterday. Healthcare with the lone sector that was negative yesterday's action. In terms of the industry groups, we continue to see domination by the same 5 industry groups: retail, railroads, transportation, internet, and healthcare as our top leaders. Obviously, we've had a number of earnings reports come out in the last day or so with respect to retail, so we'll continue to watch that sector with great interest. But Home Depot, Lowe's, Target, and others certainly will give us great insight as to where this sector is likely to go in the days and weeks to come. As always, greatly appreciate you liking us on YouTube and your other favorite social media platforms. If you're there, we are there. And then on support and questions, as always, support at falconglobaltraders.com. More information available at our website, and indeed about our 3 live trading rooms and our daily day trader price guide product as well. Disclaimers as always, hit the pause button to have more time to read this. And then, as always, truly, we greatly appreciate your continued participation in the Falcon Global Trading community, and look forward to seeing you, each and every one, tomorrow at our next presentation of the market preview. Good trading and goodbye.